Questions for BFM. And today we are starting with chapter number 1. We will be covering some important theory as well as the important questions which are asked in the exam generally. So let's start. First is foreign exchange risk, because this first module A is completely for forex. So there we are covering the important part, that is forex risk. Now what is the meaning of foreign exchange risk? Firstly, what is the meaning of foreign exchange? Before going to the risk, what is the meaning of foreign exchange? Foreign exchange means it comes when we have two things. Number one, either we deal in foreign money or foreign currency. Understand this. Either I deal in that foreign currency, means I am holding that foreign currency in that, let's say dollar. We'll consider only one thing, dollar now. Or second is exchange dollar to rupee. Exchange dollar to rupee, right? So both the things are called as forex. Okay, it means if I am holding the dollar, then also it's called as foreign exchange, and if I am doing the exchange against the rupee, then also it's called as foreign exchange. Okay, so meaning means whenever we have two currencies, only then it's of any use. If I am dealing in single currency, dollar to dollar, there is no forex. If I am dealing in this dollar to rupee, then no forex. Okay, so exchange rate affects you only when you are dealing in two currencies. So basically the risk will be there only when you will be dealing in two currencies, minimum two. It can be two or more. Minimum two if you deal, then only it will affect you. Okay. So foreign exchange risk refers to the losses that an international financial transaction may incur due to the currency fluctuations. Okay. Currency fluctuation. What do you mean by these fluctuations? Suppose, let's say, we'll take one example over here. It is, suppose $1 equals to $1, let's say, equals to rupees 80 now. Okay, let's say 80. Now what happens if this 80 rupees dollar moves to, let's say, rupees 90 tomorrow, and if I have purchased this dollar at 80, what will I do? I'll immediately sell it, because it is affecting me on the positive side, because I've purchased it at 80 and now it is 90. So if I sell it, I'll get 90 rupees, isn't it? So this is known as a currency fluctuation. It can be in the reverse direction also. I've purchased at 80 and it can go to 70 also. Okay. When 80 goes to 90, it means dollar is stronger. When 80 goes to 70, it means rupee is stronger. Okay. That is the meaning of this stronger. Whenever this amount increases 80 to 90, remember, I'm again telling you, whenever rupee goes, $1 equals to 80 goes to $1 equals to 90, then it means dollar has got stronger. Because earlier I was purchasing dollar for 80 rupees, now I'm purchasing dollar for 90 rupees. So dollar has become stronger, and vice versa over here. Okay. Foreign exchange risk can also affect investors who trade in international markets and businesses engaged in import export of goods or services to multiple countries. So whom all does the forex affect, this risk affect? It affects investors. Suppose if I am an investor, I have brought dollars at 80 and it moves to 70, then I am at risk here. Always remember, what do you mean by the risk? The risk means losses. Suppose if I have brought it at 80 and now it is going to 90, then there is no risk to me, because I purchased at 80, now it is going to 90. So it's not a risk to me. I am earning more. Risk is when it goes in the reverse direction. I purchased it at 80 and then it goes to 70. Now there is a risk, because the word losses come in over here. So forex refers to the losses, not only losses, not the benefits. Okay. So it affects whom? Investors who trade in international markets. Businesses engaged in import exports. Here, businesses means like many companies. Okay. All the companies, majority of the companies, big companies in India are engaged in what? Import and export, right? So when they are engaged in import and export, they'll definitely be affected by the forex risk, isn't it? Who trade in. So investors, businesses, or services to multiple countries. So the software companies, they provide services, they don't provide products. So all these are affected. Even the retail investor is affected to the effect. Why? Retail transfer of money. Suppose if I have to transfer money to my near one in USA, if the dollar moves from 80 to 90, I'll have to pay more in that case, isn't it? So it will affect for the banking transactions also. Okay. So who all are the main sufferers or main elements who are affected? One, on a major scale, one is investor, second is businesses. These two are the main elements over here. Okay. What are the types of risks? One is exchange risk. It is most common and obvious risk in foreign exchange dealing operations and arise mainly on account of fluctuations in exchange rates and or where the mismatches occurs in the asset liabilities and receivable payables. Exchange risk means what? Most common and obvious forex exchange, foreign exchange dealing operations. Okay, in dealing operations on account of fluctuations. This word is important over here. Fluctuations. As we saw earlier, 80 to 90. Suppose if I have shorted here, one thing I'll again explain you. Long position means what and short means what? Short. Okay. Long means if I buy now, $1 equals to 80. I buy, and then I sell at 90. So that is long. Short means $1 equals to 80. I sell now. Here I am selling first. I sell $1 equals to 80, and then I buy when it goes to 70. So this is short position. So understand, if the dollar goes from 80 to 90, the one who is in the long position will benefit, but the one who is in the short position will suffer losses. Okay, because he has sold. Short position means he has sold first. Then he'll have to buy it at a higher rate. Okay. So the one, if the dollar goes up, means if the rupee goes up 80 to 90, then the one who is shorted will suffer. So these are known as fluctuations. So it is most common and obvious risk in the foreign exchange dealing operations and arise mainly on account of fluctuations and or when there are mismatches in assets and liabilities. Means what? What do you mean by this? Assets and liabilities. It means, suppose the balance sheet of any bank consists of two parts. Okay, one is the India operations, second is the forex operations. So if there are mismatches in the forex operations, then also my exchange risk is affected. Okay. Second is settlement risk. Settlement risk is the risk of failure of the counterparty due to the course of settlement, during the course of settlement, due to the time zone difference between the two currencies to be exchanged. That is, when one party performs its part of contract by delivering the currency to be delivered by it, but the counterparty fails before delivering the currency to be delivered by it in a different time zone. This settlement risk generally happens between India and US, because when it is day in India, it is night in US. And suppose today is what, 1st of August. 1st August has started today over here, but in US it has not started. US it will start when we are at night. So there is a time zone difference over here. So this time zone difference creates the settlement risk. Okay. So due to time zone differences, remember this. And second point over here is the counterparty. Counterparty fails due to this time zone difference. Okay. Third, country risk. It is a risk of the counterparty situated in different country, unable to perform its part of the contractual obligations despite its willingness to do so due to the local government regulations or political or economic instability in that country. Now let me give you one example over here. See this, in country risk what happens? Suppose I am invested, let's say I have invested in Pakistan. Okay, I will never invest, but if I had invested in Pakistan, let's say 5 years back. So what happened in last 2 years? Everything has gone shattered. Inflation is high, the government controls are very weak. So in that case what happens? Even though my buyer whoever is the person who is doing the business for me, even though that person might be ready, but what happens? He might not be able to send the forex to me because the problem over here will be the country will stop him. Do you know? Suppose in Afghanistan, suppose somebody is having a business in Afghanistan, and I've sold to somebody. Let's say I've sold to somebody in Afghanistan. Okay, but what happens afterwards? Let's say I've sold. Then at that time it is a democratic government. Afterwards, what happens? Taliban takes over. So Taliban tells that person that you cannot send any forex out of Afghanistan. So in that case, what happens? My money is locked. Why? Is my party bad? No. It is a government which has started doing something. Okay. So due to the local government regulations or political or economic instability. Okay. So country risk is mainly due to the government pressures. Okay. Everyone download Adda 24/7 app on your mobile. In this app, you will be getting the premium study material plus live classes, ebooks, tests, everything. For clearing your CAIIB exam, you need only 3 elements. Okay. Number one is classes. So you get live classes, video classes over here. Then you require books, classes. Then you require books. So you get ebooks over here. To check your knowledge, you require tests. Okay. So tests are available over here. So all the 3 things which are required are available. So that's why immediately download this premium app. Okay. Adda 24/7 app. Which of the statements is false? Now let's come to the question time. Forward exchange rate is good predictor of future spot exchange rate. Forward exchange rate and a future spot rate may not be the same. We want false. Okay, look at this. We want a false one. So forward exchange and future spot rate may not be the same. Forward exchange rate is an unbiased predictor of future exchange rate. The spot exchange rate is a good predictor of the future exchange rate. So which one of them is false? We want false now. Forward exchange rate is a good predictor of the future spot exchange rate. So that is true. What is the forward rate? Forward rate means what all can be there as a spot in future. What is spot? Spot means today's rate. Suppose if today's rate for dollar is $1 equals to 80 rupees. Okay. So after 3 months, what can be the rate? So that what can be the rate is known as the forward exchange rate. So that is true. But I want what? False. Okay. Forward exchange rate and a future spot rate may not be the same. So that is also true. Forward exchange rate means this is a contract booked. This forward rate is always a contract. Means what do you mean by this? See this. $1 equals to 80 today at spot. And the forward rate I am booking for 3 months later. 3 months. Okay. Which I am booking. Let's say it is 80 over here. Then it is 82. I am booking it for 82. Okay. What does it mean? I am assuming, I am guessing, this is a guesswork. So this is a forward rate, and actually when the 3 months come, the rate may not be 82 at all. The rate may be 80 again. The rate may be 79. So forward exchange rate and a future spot rate may not be the same. That is also true. The forward exchange rate is an unbiased predictor of the future exchange rate. So unbiased predictor. So it can give a prediction. So forward exchange rate is an unbiased predictor. That is a true option. Why? Because when I book this on basis of some guessing, on some experience, on some technical analysis, right? So this can be a good predictor. And what about a D? Spot exchange rate is a good predictor of the future exchange rate. That is false. Spot can predict only about today's rate. It can't predict anything about the future rates. Okay. The objective of central banks include, central bank means RBI. The objective of RBI include to ensure country's balance of payments remains in equilibrium, isn't it? Obviously. To accumulate the country's foreign exchange reserves, to accumulate, okay? To ensure implementation of country's exchange rate policy. See here, country's exchange rate policy. to control international trade. So here, control international trade is out. Nobody can control international trade, right? So you can only be a participant in that. So D is out. Now we have to remove out of these three which seem to be the correct ones to ensure country's balance of payment remains in equilibrium. To accumulate means what? RBI goes on collecting the dollars over here. So it's not the job of RBI. The dollars are collected to that level only up to the time they are sufficient for the country for buying the imports. We shouldn't go on accumulating heavily. So that is also wrong. Now, fight is between A and C to ensure the implementation of country's exchange rate policies. So implementation is done by whom? Implementation is done by commercial banks, commercial and cooperative banks. Okay, cooperative banks. RBI prepares the policy, exchange rate policy. So the correct answer is this: to ensure country's balance of payment remains in equilibrium. That is the main job of RBI. If your balance of payment does not remain in equilibrium, there will be two problems. One is our external trade will be affected, import and export, and secondly, the inflation will rise, huge rise. So it also affects country's inflation. Remember this, okay? So A is the answer. Next one. The exporter shall necessarily submit the export documents to the bank within 15 days from the date of documents, 15 days from the date of shipment, 21 days from the date of documents, 21 days from the date of shipment. So what is the answer? A, B, C or D? What do you mean by this? Exporter shall necessarily submit the export documents means what? Suppose I am the exporter. Look at this. I am the exporter. Okay. And I have done some exports. Okay. I have done the exports over here. And there is a buyer. Let's see. Let's not talk about the buyer right now. So how will I do the exports? I'll do the exports via ship, right? Ship. Let's say mainly ship. 90% it is done via ship. Okay. It can be done through air also or anything, but mainly via ship. So once I send these goods via ship, I'll be getting the bill of lading, BL. Generally, I get this BL. So this BL date, whatever is the date of this BL, means onboard date. This is known as onboard date. Whatever is the onboard date, from 21 days from this date, I have to submit the documents to the bank. Or AD we call it. Bank, actually the bank word is not correct. It is AD, authorized dealer. Okay. So it is 21 days from the date of shipment. Clear? Everyone, subscribe to Officers Adda 24/7 YouTube channel. In this channel, number one, you get a free YouTube series, free YT series on all the subjects of JAIB and CAIIB, all the subjects. Secondly, you get this latest updates from IIBF. All the updates you get. Updates means whatever are the, like, see this today morning it came that JIB registrations have started from IIBF. Immediately it's updated on Adda 24/7. So that's why follow the channel, subscribe to it, click on the bell icon. Okay. The multinational company encounters the following exposures to foreign exchange. So which is the exposure this MNC will encounter? One is translation, second is economic, third is transaction, and fourth is all of the above. So what is the answer over here? Economic means what? Related to business. Economy, business. Okay. Transaction means what? Related to the buyer seller. Buyer seller. Okay, this is transaction. This may be affected due to the legal laws also. This can be due to legal also. Okay. Legal risk is also part of this only. And what is translation? Translation is when you convert the foreign currency, dollar currency, to INR, rupees. Notional. This is always known as notional. Translation risk is always notional. It is never physical. Okay. So which are the risks which this foreign company, multinational company encounters? All of them. Okay. Because all the risks are exposed when you are dealing in multiple countries. Okay. The role of hedging agent is to, now what is this hedging agent? Hedging, basically remember hedging, the role of hedging is to, forget this agent also now. So what is the role of hedging? Assist a firm in determining which foreign exchange transaction should be hedged. So why is this agent over there? Agent means it's a human being or a party or a company, anything it can be. So any individual, natural or artificial person. So what does that person do? It's a sort of help required, okay? So assist the firm in determining which foreign exchange transaction should be hedged. So this company tells you what is to be hedged, whether I should hedge a dollar, whether I should hedge a euro, or whether I should hedge some African country's currency. Will you hedge that? Suppose if I tell you to hedge Pakistani rupee today, will you hedge it? Not at all, isn't it? Sri Lankan rupee currency, if I tell you to hedge, not at all. North Korean currency, not at all. Chinese currency, yuan, not at all. So, what does this agent do? This agent has an experience. This agent tells the firm, assists the firm in determining which foreign exchange should be hedged. Second, assist the firm in determining the terms of the currency or interest rate swaps. So this is also a point. So the answer is both A and B, because hedging is an important tool. What is the hedging basically? Hedging means covers the risk. Suppose let's say I have brought let's say what, Reliance share in market, okay? Reliance, I have brought it at let's say 3000, okay? So why have I brought this at 3000? So that it goes to 3500 and I'll sell at that time, right? That is the basic logic, isn't it? Why do we buy anything? To sell. But imagine if this Reliance starts going to 2000. So I'll be in a loss. Here it's a loss to me, right? To cover this loss, what will I do? I'll do hedge. I'll do hedge using what? Derivatives. Derivatives means it can be anything. It can be options, futures, forwards, swaps, FRAs, anything it can be. So the answer is both A and B. Okay. Everyone, for those who don't know the compulsory papers, check this: ABM, BFM, ABFM, BRBN, electives, rural, HR, IT, central banking and risk. So select the elective properly. No negative marking. Some subjective questions are there without options. Okay. So you'll have to input it in that screen using the virtual keypad. Okay. Now the batch. See this Sankalpa batch starting from August 4, both in English and bilingual. Join it ASAP. Huge discounts are going on. Let me show you how to join this. Okay. Go to Adda 24/7. Okay. Let me go to Adda 24/7 over here. Hold on. If you are having the app, I would always suggest you to go through the app. In the app, you are getting coin system. In the coin system, you will earn a bit extra, means around 1% extra you will earn. Go to Adda 24/7 over here. Okay. Now here, click on JIB and CIB. Click on CIB November. Say this, November 23. Now you see the batches. See this. Okay. You can join this August 4 batch. It is in bilingual. You will see one in English also. So join the batch. Once you join this, you will see the details over here. All the details. Recorded videos, interactive classes, expert faculties, then regular latest updates. Okay. Recorded videos means what? If you miss out on any class someday, then you'll definitely get back to it using the recorded classes. Click on buy now. Then look at this. 23,999 reduces to 4,799. Huge discounts. Join immediately. In fact, I would suggest you to join the Mahapacks. In Mahapacks, you are getting multiple batches. See here, I'll tell you. Go to JIB and CIB Mahapack. Okay. Click on, see the CIB Mahapack. Here you are getting multiple batches. Multiple batches means around 10 to 12 batches per subject. So that many times you are getting the revisions. All the product features you can read. Okay. So interactive classes are there. You can ask the questions there and then itself. Click on buy now. Look at this. 51,572 reduces to 10,314. And look at the validity. Double validity. 12 months. 80% off. Join it ASAP, isn't it? What are you waiting for? Okay. Chalo, bye from my side. I'll be back tomorrow with another series. Till then, keep studying and do join the batches ASAP because exams are near. Okay.